Alrighty, we are live, guys. Earnings season is upon us, and in tonight's live stream, we are going to be talking about three dividend stocks who've just recently put out some very solid earnings. Now, I have each of these three companies in my portfolio, and I know a lot of you guys out there have them as well, so it's going to be really exciting to talk about them with you. But before we get into those, guys, welcome to another Dividend Happy Hour. I'm so stoked to have you guys here hanging out with me for this next hour as we chat dividends, and we're going to have some fun. But before we kick things off, I think a quick toast is in order. So here's to dividends, because it's really what's bringing us together here tonight. So here's a toast to that, and here's to you guys. I hope you guys had a fantastic week. And a couple questions for you guys. Number one, you guys know how this works. Number one, let me know in the live chat, and also let me know in the comments below if you're watching the replay. What did you buy this week? Which stocks did you pick up? I'd love to hear about it. And also, number two, what are you sipping tonight? What did you bring tonight to drink on the Dividend Happy Hour? Let me know that in the live chat or in the comments below if you're watching the replay. Personally, it's kind of boring. I'm just drinking. You guys know me. I've kind of been cooling it on the margaritas lately, but I'm just drinking a flavored sparkling water from Walmart. I think it's not the Great Value brand, but it's one of those. But it basically just tastes like an orange soda. I know it doesn't quite look like it, but it tastes exactly like an Orange Crush, and it's really good. 0 calorie, and so that's what I'm rocking with tonight. Let's see what you guys got going on here. And it looks like there's about 63 of us here in the stream. We got all the usual suspects here. Thank you guys all so much for hanging out with me. It looks like as far as purchases, I am seeing, let's see, where are we at here? As far as purchases, I'm seeing some ABR and Altry Group by Dividend Kings. It looks like the Cookie Monster. No purchases so far, but drinking some H2O. J Money's drinking some beer and picked up some Reliant Steel, which is a really great looking company, actually. That's one that I have on my watch list right now that I'm trying to learn some more about. Thomas here picked up some Tesla on the dip. Good stuff. Carlos, some DGRO. Nice ETF. Looks like, who we got here? Leroy here picked up some SCHD. Of course, wouldn't expect anything else. Charles here picked up some TSLX. I'm not sure what that is, actually. Wilfredo here picked up some SCHD as well. Todd rocking some Altria Group and sipping on some Liquid Death. And I'm actually curious about how that is. Is Liquid Death any good, or is it just water? And yeah, let me know how it is. Let's see. Sean here's picked up some Realty Income and Jeppy. And looks like Nathan here went on a little shopping spree. Some FITB, SCHD, and Realty Income. Let's see. Lucas here, $20 in VSP. That's a piece stack in cash. Let's see. Luis here also had a nice little shopping spree. SCHD, VYM, DVN, BBY, Ally, and ARCC. Really nice pickups there. Nick picked up some Altria, or not Altria Group, excuse me, Realty Income. Love that. CG picked up some NXST. And then Lamp here, not a purchase or a cocktail, but new sub and first live stream. Well, we're happy to have you aboard. Thank you so much for tuning into the Dividend Happy Hour. And actually, guys, on that note, I should have mentioned this a minute ago. I meant to. I want to invite you guys to join the Dividend Happy Hour after party, which is a Patreon exclusive bonus live stream that we are starting to do every single week. This week will mark the second after party. Last week's was a lot of fun. Last week's Dividend Happy Hour was a lot of fun, actually. It was really more like the Dividend Variety Hour. But anyway, guys, the after party starts immediately after this live stream ends. So we're going to go for about an hour here on YouTube, and then we're immediately going to jump over to the after party on Patreon. And if you guys want to tune into that, you can just click the link or go to the link right here above my head. You can join the Patreon there, or you can click the same link in the description of this video. It's right there as well. And I hope you guys do join, because the after party last week, it was a lot of fun. This week, I think it's going to be a lot of fun. We have a really cool community growing over there, and there's some other great perks to being in the Patreon group, Patreon community as well, in addition to the after party. And I think you guys would enjoy it. And also, it's a great way to support the work here we're doing on the channel. So if you guys want to tune in, hang out with us on the after party, links right there or in the description of this video. That'd be awesome. But anyway, getting back to some of the purchases, I'm seeing some 3M, I'm seeing some Tyson Foods, a lot of Realty Income this week, and also, not surprisingly, a lot of SCHD. That's just kind of how it goes. And also, too, guys, I apologize for this right here. You'll see some weird lighting on my face and shirt or whatever. It's just because the time of day. and I'm sitting like right next to my blind, so some of the light's coming through. I apologize for that. But hopefully it doesn't bug you guys too much. Ricardo here, we'll go to the last couple purchases, then we'll get into the main event. He picked up some VTL, QQQ, Merck, ITD. I'm not familiar with that one. And Williams-Sonoma, which is looking good. That's one I was talking about recently. Really liking that company right now. And then Rubiest, some IIPR. And then Shamir. I can't leave my man Shamir hanging. Picked up some Hormel Foods. Nice pickup. So with that, guys, for those of you who are just now joining, it looks like there's just over 100 of us right now in the stream. Tonight we're talking about three dividend stocks, or three companies rather, who just reported some really solid quarterly earnings. Now all three of these are ones that I have in my portfolio. I know a lot of you guys have them as well. And before we get into the first one, let me know in the live chat. Do you guys have any guesses as to which stocks we're talking about today? You can just guess one. You can try and guess all three if you want to. But I'd be curious to know. You guys are usually pretty perceptive and can usually guess at least one of these whenever we do these. So let me know in the live chat right now or in the comments below if you're watching the replay if you guys have any guesses as to which companies we are talking about. I bet some of you guys can get it. And I just gave it a huge hint too. Like I said, I have all three of these. So a couple guesses are in. Okay. Shamir thinks a little Procter Gamble. Intercompose thinks some Medtronic. Chris says Johnson & Johnson. Dividend King Starbucks. Luis also with some J&J. Suzuki Man, J&J, Procter & Gamble, and Watsco. That's one of his favorite companies. Nick here thinks Procter & Gamble, Bank of America, and a mystery one for the third one. Gabriel says Johnson & Johnson. I'm seeing a lot of Johnson & Johnson, Procter & Gamble, Starbucks. AT&T, that's one I definitely thought about. That one's not going to be on tonight's list. But maybe we'll talk a little bit about AT&T in the after party if you guys want to. I haven't gone through their earnings yet, but I've read a few things on it. It's kind of interesting. But anyway, guys, I won't reveal all three just yet, but I will tell you the very first one we're talking about is going to be Procter and Gamble. Now, we're going to just talk a little bit about their share price performance real quick because it's been really well, especially since earnings. Now, if we zoom into the last 5 days, look at this, guys. So they reported on April 21st, actually today. They reported today before the market opened, and look at this big jump. Looks like they closed out the day up 3.5%, so quite a big jump for Procter & Gamble. And like I said, the earnings, they crushed earnings. Now, getting into that a little bit. Overall, kind of high-level stuff. They beat on both revenue and earnings. It looks like for earnings, they beat by 5 cents. For revenue, they beat by $750 million. So they did really well. And year over year, their net sales were up 4%, organic sales up 7%. So Procter & Gamble, not surprisingly, did really well. And with this earnings beat, they actually announced that they'd be raising their guidance for, I think, really just the revenue. So they're going to be raising that approximately 1% versus the prior fiscal year, from a prior guidance range of down 1% to in line. So prior to this raise in guidance, they thought that they were going to be down revenue compared to 2022, but now they're thinking, things are looking better than we thought. We actually might be up a little bit, but earnings is still going to be pretty similar, in line up to 4% versus fiscal 2022 earnings per share of $5.81. So they think they'll be 5 cents above that with a, consensus earnings per share of $5.86. So we'll see what happens there, but that's looking pretty good. And in addition to this solid earnings news, Procter & Gamble also announced their 67th consecutive annual dividend increase. It's not a huge raise. They only raised it 3%, but we'll still take it, guys. I mean, 67 years is quite the track record, and I think really makes Procter & Gamble like the king of dividend kings, if you will. You guys might have some different opinions on that. You guys might think there are some other better dividend kings out there, but I love Procter & Gamble. It's one of the biggest positions in my portfolio, number 2, and very happy to see them continuing their growth streak on the dividend. But anyway, getting back here, guys. Moving on. One thing I left out, too. This is the 133rd consecutive year that Procter & Gamble has paid a dividend. So that's very, very impressive. And, it was pretty much business as usual for Procter & Gamble. With a company like this, it's, they're in the consumer staples sector. Just because of the nature of the products they sell, there's not going to be huge fluctuations either up or down in terms of volume or sales or whatever, which is one of the reasons we want to buy into a company like this. It's a bit more predictable than some other companies, more stable, more reliable. I mean, they have 67 years of dividend growth, for goodness sakes. That's really good. It's just a boring company. And one of the things that I took away from listening to this earnings call, I went through it earlier this afternoon, was that it was something that their CEO said. I'll actually just go over to that and show it to you. I don't want to be mumbling forever. So they got in the Q&A section, one of the analysts asked a question. He asked the CEO this: John, clearly you've gone through a lot of transformation over the past 5-6 years that the company brought from a portfolio standpoint, organizational standpoint, superiority. Can you help us understand how you think internally these changes can help you navigate a potentially weaker consumer environment if what we're seeing in Europe were to extend into the US? So how do you guys think you'll maneuver if we go deeper into a recession and the economic environment continues to worsen? And I thought this was a really interesting answer by the CEO. It's kind of long. I don't know if I'll read the whole thing, but his response to this was, what I really like about the strategic choices that we've made and the approach that we're taking currently is that it is the strongest approach I can think of for a very healthy economic environment, so when times are good, or a very difficult economic environment when times are bad and worsening like they might be. The indicated actions don't change. So no matter what's going on in the economy, our strategy doesn't change. We're just focused on making superior products. You can see that at the last sentence of that first paragraph. The importance of superiority to consumers and categories where performance drives brand choice. So when it comes to things like dish soap, when it comes to deodorants, there's obviously the private label, the off brands, the cheap brands. But Procter & Gamble thinks that their products stand out, and their differentiator is not only brand recognition, Dawn dish soap, Tide laundry detergent, Gillette, we can come up with all the brands. Not only is brand recognition an advantage for them, but also they think their products are superior. They're more expensive than the off brands, than the Great Value if we're talking Walmart, Good and Gather if we're talking Target. I don't know what Kroger's is, but the product itself is superior. When it comes to the laundry detergent, when it comes to let's stick with the laundry detergent. When it comes to the detergent, you're not going to have to wash your clothes twice, where you might have to do that when you buy the off-brand. When it comes to washing dishes, it's not going to be smudgy. It's not going to leave streaks. You use the what do they call it when the dishwashing stuff? I don't use my dishwasher. I just wash all my dishes manually. But I use Dawn dish soap. And so you go with the off-brand, there might be streaks. Things might not dry and look as good when it's all said and done. So Procter & Gamble thinks that their differentiator, one of them, is the performance of the products. But anyway, focus of the portfolio on daily use categories where performance drives brand choice and superiority within each of those categories across product, package. So even their packaging, how they package their products, they think that's superior. Communication, go-to-market, and value for consumers and customers. I just don't see anything in that I would change, meaning he would change. I mean, obviously, tactically, there'd be some different decisions on the margin, but the broad underlying approach sets us up very well, even if, or particularly if, we end up in a more difficult environment. And I really like that response. For them, the strategy doesn't change. They're not being reactive to what the market's doing. They have a solid strategy in place that's going to work no matter which direction the economy swings. And I think that's good. I like that consistency in strategy. I like the consistency in volume. I like the consistency in sales. Obviously, like the consistency in dividend increases. But all of that comes from just having a strong, steady strategy that seems to be working for them. So I was really happy to see overall what happened in Procter & Gamble's earnings. And there were probably some other key takeaways. I'm sure some of you guys out there listened to the earnings as well. And I'm actually curious if you guys did listen to the quarterly earnings, if there were some other takeaways from this earnings that you guys picked up on that you'd like to share. I'd love to hear about it in the live chat. Obviously, this is kind of a high-level overview, but have any of you guys listened to Procter & Gamble's quarterly earnings yet? Is that something you guys even go through? Typically, for a company like Procter & Gamble, I know they're good, so I don't always go through their earnings, but this one was kind of interesting, and I'm glad I took the time to listen to it. But yeah, let me know in the live chat if you guys check this out at all, or in the comments below if you watch the replay, if you guys read anything else, or if there were any other takeaways for you guys. Before we move on, we'll move on to the next one in just a moment too. And you guys already guessed it too. I mean, I won't tell you which one it is quite yet, but you guys, like I said, you guys are pretty perceptive. You guys know more or less which ones we're talking about tonight. I bet the third one's going to surprise you. I don't think you guys will be able to get the third one. We'll cross that bridge in just a moment though. Okay, so let's move on to... Actually, give me a second. I got to set it up over here on Seeking Alpha. We're going to move on to the second company who crushed earnings. Okay, you guys ready for this one? So Going back over to the screen, the second company that crushed earnings, actually, yeah, the second company that crushed earnings, guys, is going to be Johnson & Johnson. Oops. There we go. Right there. That's what we want. So Johnson & Johnson's share price, we'll get into the earnings stuff in just a moment, but their share price has really been interesting lately. I mean, they're down 11.25%, 11.25% in the last year. But if we zoom in a little bit closer, looking at the last week, they're even down 2%. I think this is where they reported earnings. So since reporting earnings, even though they beat on both the top line and the bottom line, which we'll see in just a moment, they actually dropped in share price. And I think this had something possibly to do with the talcum powder lawsuit, which we'll talk about momentarily as well. But if we look across the last month, Johnson & Johnson overall has had a pretty solid 30 days. They're up 6.5%. And that really looks like in the short term, that's like the only positive movement for Johnson & Johnson. Year to date, they're still down 8.7%. And I don't have it pulled up here, but I've actually been buying a lot of Johnson & Johnson over the last few months, over the last couple months, which has been really nice to buy at a bit of a discount. But anyway, getting into their earnings, guys, like I said, they beat on both the top and bottom line. So as far as the earnings, they beat by 18 cents. As far as the revenue goes, the top line, they beat by over $1 billion. So that's up 5.5% year over year, which is really solid. So Johnson & Johnson did fantastic. And also like Procter Gamble, they raised their guidance. So Johnson & Johnson raised its full year guidance for 2023 for earnings to be between 1060 and 1070 compared to the prior outlook of 1045 to 1065. So that's pretty solid. We'll take a little raise of guidance there. And then on the top line, they expect the full year 2023 sales to be between basically $98 billion to $99 billion, which is up about $1 billion compared to their prior outlook. So that's looking really good as well, which is great. Maybe they raised it. I mean, they kind of surprised on the top line this quarter by about $1 billion. And I don't really know how they exactly come up with these new outlooks or these new guidance, but maybe that has something to do with that new number. But anyway, guys, moving on. Like Procter & Gamble, Johnson & Johnson also raised their dividends. So they had a bit bigger of a hike than Procter & Gamble, where Procter & Gamble raised it by 3%. Johnson & Johnson raised theirs by 5.3%. We love to see that. And Johnson & Johnson is also a dividend king with, I believe now, 61 consecutive years of dividend growth. So 6 straight decades. That's more than twice as long as I've been alive. So I really do like to see that. But anyway, getting back over here, guys. Moving on, one of my key takeaways, actually, let me take a step backwards, because the two important things I was looking for out of Johnson & Johnson's earnings, and this was what everyone wants to know, I'm sure. Number one, what's happening with the consumer health spinoff, Kenvue, that's what they call it. When is that going to happen? Also, number two, what is going on with the talcum lawsuit? This has been a big deal for Johnson & Johnson, and the most recent news was that they were going to settle for, there was going to be a settlement they were working on. Take a step back. LTL, which is their subsidiary, they were trying to put that into bankruptcy, give out all the liabilities to that. Didn't quite work the first time. They were planning on going for a second time, which they did talk about in the earnings call. And there's a settlement on the table. So let's go check that out. So looking here. First, talking about Kenvue, the consumer health business, the spinoff there. That second sentence, we remain on track to complete the separation of this business in 2023, assuming accommodative market conditions. So they're not exactly sure when. Sometime this year. I guess we'll have to stay tuned and see what happens there. But if we look there in the second paragraph, they kind of talk about it a little bit more. So since the start of the year, we've been operating the business basically as a company within a company, and they're going to continue to work on giving us an IPO, a potential IPO. As first step in the separation. But anyway, they kind of use this to tie into the talcum powder lawsuit a little bit. And so they said here, LTL's bankruptcy, which like I said was the subsidiary that they were trying to put all of this on, do the Texas two-step with. LTL's bankruptcy filing will not have an impact on the Kenvue separation. So the bankruptcy, the talcum powder lawsuit shouldn't have an impact on the consumer health segment spinning off. And the liabilities at least in the U.S. and Canada, will remain with the parent company, will remain with Johnson & Johnson. And we can see in the highlighted section there in the second paragraph, Johnson & Johnson at this point is looking like they're going to be on the hook for an $8.9 billion settlement, which they hope to pay over a 25-year period. And they said more on the matter in the earnings call, not too much more. kind of touched on, their stance on how they feel about the product itself. They talked about some of the science behind their product, third-party data, and all this stuff. But the main point was that it's not going to affect the consumer health spinoff, and we're going to have some more information next month, it seems like, but they might be on the hook, for an $8.9 billion settlement. And if all goes through, they're going to take that to court next month and see what happens. But I think they also said they have something like 60,000 or 70,000 of the plaintiffs on board with this potential settlement. So we'll have to see what happens. But those are the couple main takeaways from the Johnson & Johnson Johnson's earnings call. And I think that's why the share price went down, because $8.9 billion, quite a bit of money. They should be able to afford that. Hopefully it won't be too much more than that. I know in the Discord group, they've kind of been talking about it. I've read some of the comments on Seeking Alpha about it, and I think people are skeptical that will be the final number. Some other people were saying, if they're saying, about $9 billion now, it's maybe we should account for like $20 billion. But I don't know. We're just going to have to see how this all plays out. But anyway, guys, that was the second company that's crushed earnings. And let's see. I want to ask you guys now, do you have a guess as to what this third company is going to be? I'm curious as to whether or not you guys can guess it. And I'll give you a hint. Okay, you already know it's in my portfolio. It's also in the industrial sector. Really good high growth dividend stock. That's huge hints right there, guys. So I think you guys can guess it just based off that. So let me know. Let me know if you guys can guess it. Okay, some of the guesses are coming through. I see Nathan guessed Costco. Will says Snap-on. Luis says Lowe's. Zal thinks Waste Management. Adon also thinks Snap-on. We got some more Lowe's, some more Snap-on, some more Lowe's. Amadou thinks AG&C. Heck no, man. You won't be finding that in my portfolio anytime soon. And real quick, while you guys are keep giving your guesses here, I want to put this up on the screen, Shamir, talking about Johnson & Johnson. This is a really good point, too. Johnson & Johnson will be fine. They have a credit rating higher than the U.S. government, so even if they have to settle with some debt, it won't kill them. That's true. They have a AAA rating, AAA credit rating, which is, you can't get any better than that. So I think Johnson & Johnson will be just fine. Still, eight almost $9 billion is no fun. But yeah, I think they'll survive as well. So you guys are really good. I mean, I'm seeing more Snap-on guesses than anything, and you guys hit the nail right on the head. We're talking about Snap-on, and I'll jump over to, let me pull up Snap-on here on Seeking Alpha. And you guys, this is Snap-on's share price performance as of late. I mean, really, across all time periods, it's been done really well. We can see it sitting at the top of its 52-week range right here, right at a 52-week high, actually. And then in the last year, they're up 16.25%. Just year to date, they're up almost 14.7%. And look at this. This is like right where they posted earnings. Wow. So that's a really big jump. So just in the last week, they're up nearly 10%. And then in the last month, about 9.5%. So last week, last month, very similar. And this is where they reported earnings right here. So really big jump for Snap-on. So they did really freaking good. And if we go take a look at their earnings stats, just the high level stuff, they beat on both earnings and revenue, as I'm sure you can imagine. Earnings beat by 49 cents, revenue beat by $50 million. And the revenue was up 8% year over year. That is no joke. Snap-on did really well. And unlike the last two companies, unfortunately, Snap-on has yet to announce a dividend raise. It just might not be the time of year for them to announce that. But, I have no doubts that they'll continue to raise their dividend. In fact, if we take a look at the dividend stats real quick, like I said a moment ago, this is one of my favorite high-growth dividend companies. The dividend stats are looking really sweet. So 2.5% yield, okay, not, middle of the road there. Payout ratio is really low, so they have a lot of runway, a very long runway to continue growing this dividend, which they've done at a very aggressive rate, as we can see right here. And the dividend growth streak's not bad, 13 straight years, but I think the dividend history is quite longer. This says 33 years, but I remember reading, I don't have the graphic for it, but I put it in a recent video of mine, but I remember reading that Snap-on has paid uninterrupted dividends since, I believe, 1939. So that's the last 84 years, right? So they've been paying dividends for a very long time. But anyway, guys, one of the key takeaways, actually, I think let me rephrase this. One of the big concerns I think when people talk about Snap-on, because most people know them for their, their automotive tools and diagnostic tools and stuff like that. And so one of the things I hear about Snap-on, hear people say is, well, how are they going to manage the transition to EV, to, a different landscape for automobiles and whatever comes after that? And they touched on this in the earnings call. I'm kind of arriving at that point. But one thing to keep in mind with Snap-on is they are in so many different industries. It's not just cars. That's a big component of their sales for sure. But it's not just cars. They also make tools and equipment for aviation, for the military, for mining, for, like windmills and stuff. They actually make tools and products for a lot of different industries. They list it on their website. Definitely worth a read. But this company is very diverse. But just in terms of making tools for a new automobile landscape, for different types of cars that, run on a different type of fuel, they had this to say, the CEO, Nick Pinchuk, who's a very energetic guy. I was saying it in the Discord group earlier today. I've listened to a handful of Snap-on's earnings calls now, and I swear every single time, every quarter, and they probably make a joke out of it internally, but he works the phrase boom shakalaka into every one of the quarterly earnings calls. And this guy, if things don't work out as CEO of Snap-on, this guy could go and be a motivational speaker. This guy has so much energy. But anyway, that's kind of beside the point. Going back over here, guys. He said, as new models break onto the market, new arrays of essential tools, equipment, and diagnostics are needed to service the different and unique characteristics of each vehicle. I'll just read the rest of it because it's kind of cool. So, for repair shops, business is booming. If you're taking your vehicle in for service, recently you've witnessed this firsthand. The pays are full and the parking lots are chock-a-block. That's kind of like a boom shakalaka phrase too. And when I speak with our franchisees, they're enthusiastic, saying demand is robust. It's written all over the numbers. Garages are scheduled further out for shops of all types. Owners see the growth. They know they need technicians. And as you might expect, the rise in the tech count is substantial and the wages are moving up. And then, of course, this is all music to our ears. We believe that with the new vehicle models, the rise of automation, the growing need for precision, and the increasing vehicle complexity, and think about it too. Just think about how cars have changed even just over the last 10 years. Every car has got a screen now. Even dashes are going digital. I have a digital dash in my car, and that's just kind of the way things are going, and that will increasingly become the case as more EVs come onto the market and stuff like that. But anyway, we may be entering the golden age of vehicle repair, and our numbers say it may be so. As a shareholder, that's a pretty big statement. We may be entering the golden age of vehicle repair. That's going to be great for Snap-on. And, in some capacity, these earnings call, the executives kind of have to cheerlead for the company a little bit. I mean, we saw just based on the share price performance of all these companies how the price reacted to the earnings news, whether it was good or whether it was bad. I mean, we're not talking about AT&T. Maybe we will later, but they did not react very well at all to their earnings news. That was a hard company to cheerlead for. But when it comes to Snap-on, he's a big cheerleader. So we're just going to have to see what happens with Snap-on. But I do believe, and actually let's go back over to Seeking Alpha, because they touched on this a little bit in the call. He said something like, this was the 11th consecutive quarter where they've beat both the top line and bottom line. And so let's just go see that real quick. So we're seeing, this is the earnings. This is all their earnings history. The green is where they've beat. The red is where they've missed. And we can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 11 straight quarters of beating earnings. Prior to that, it looks like they had a run quite in the red here, at least on the top line. But, since 2020, since the pandemic started, things have been looking really good for Snap-on. And the share price, once again, has been doing really well. And in fact, this has become just how the share price has been moving. This has become one of my best performing positions. If we look here, we're going to organize it by best performing to worst performing. Snap-on is now number 4. I think that's only been the case as of this week. I don't even think they were in my top 10, really. If we look at this, if they jumped 9% in the last week, they would have been about 15% before, so they would have been just behind EPD. So that's a really big jump for this company in such a short amount of time. And it's bittersweet, as you guys know. As dividend investors, we want to see our companies doing well, so I'll take this good news for sure. But at the same time, man, I really want to pick up some more Snap-on, and I don't know if I can buy it when it's excuse me, when it's this far above my average cost per share, just something doesn't feel too good about that. But anyway, guys, those are the three companies, at least in my portfolio, that have really crushed earnings. And there's going to be more next week. Maybe we'll do another one of these videos next week if you guys enjoyed this with some different companies. But for now, I want to put it back on you guys and ask you, which companies' earnings are you most interested in seeing in your portfolios? Which companies are you most looking forward to, I guess, most anticipating their earnings? A couple other ones come to mind for me. Like I said, I haven't gone through AT&T's earnings yet, so I kind of know what happened, but that was one I was definitely anticipating. Intel, for me, is going to be another big one. KRC, definitely going to be a big one. Who else we got? Altria Group, that's going to be a really interesting one to watch as well. Man, what else? Let me actually go back and look at my portfolio. Let's go back over here real quick, guys. And I want to see your guys' responses too in just a sec. So what did I say? So Intel for sure, KRC definitely, Altria Group, yes, definitely waiting for that one. ORCC, I'm kind of curious about this one as well. Starbucks, yep, definitely Starbucks. AT&T, yeah, I'll be interested to go through that one. Same with Verizon, I'll be interested to go through that one. But yeah, those are it, guys. And then just showing you my watch list real quick. I'm very interested for these companies as well. Williams-Sonoma, I'm definitely interested in this. And I read this about IKEA earlier today, actually. IKEA is not publicly traded from my understanding, but this could be, I mean, IKEA is a direct competitor to Williams-Sonoma, at least a direct competitor to some of their brands like Pottery Barn or West Elm. So let's see what happens. But Vici Properties definitely interested in. Roland's definitely interested in. This one's another very expensive one that I'd love to come down in share price. But anyway, I want to put it back on you guys. I want to see what you guys are looking forward to seeing. So put some of these on here. Let's see here. Gabriel says KMB, Kimberly-Clark, anticipating that one. Yep. Nick here says JP Morgan, Q2. Okay, they just put out their Q1, so we got to wait for Q2 for a little bit. Todd here says Caterpillar. Yeah, that's a good one. Kevin says Whirlpool. Definitely. That will definitely be one to watch. And the thing about Whirlpool, at least last I looked, is very cheap. Let's go take a look at it actually real quick. WHR. Yeah, so they're down 20% in the last year. They're actually doing really well in the last month, though. That's quite a nice gain. Wow. But the valuation's still looking pretty good. So nice low PE ratio that's getting pretty close to the 5-year average, actually. Price to cash flow is looking great. That's still down 22%, at least in the trailing 12 months. Price to book's actually not too bad either. 2.7. That's not bad. Yeah, it'll be very interesting to see what Whirlpool does. Very interesting. And I think their dividend stats are looking pretty good, right? Yeah. Look at that, guys. 5% yield. Very low payout ratio. So that's at least good to see. Nice 5-year growth rate, too. Not too high either. 9.7%. But, still very, very decent. 12 years of dividend growth as well. One company, excuse me. One company that really surprises me, their dividend stats, is Best Buy. 5%. Super high 5-year growth rate, 12 years of dividend growth. This is a triple threat in the dividend department. What are their sales? I always forget kind of what the sales are doing. I mean, yeah, I don't know. It'll be interesting to see what Best Buy does moving forward. But anyway, what else you guys looking at? So Luis here says Altria Group and AbbVie. AbbVie's another one too. I mean, we've got the Humira patent coming to an end sometime this year, I believe, right? Darth here says, for me, it will be Medtronic, Pfizer. Yeah, Pfizer's another one to watch. Altria Group and ABR. Yeah, definitely good ones. Rick here says ORI. The housing market will dictate how well they did. Yeah, I get you. James here says, I have no faith in KRC and still hold it. I get what you're saying, just based on the industry they're in and the type of assets they have. And I don't want to use their 10-year history as... I can't really use that too much to bolster my point because it's just as far as office space. Okay, their 10-year financials look really good, but we're in a different landscape now with office space. So I totally get what you're saying, and I'm going to be very interested to see what these next few years look like for KRC, especially since they recently announced that the CEO, John Kilroy, the namesake, of the company. He's going to be retiring, I think, sometime early next year or at the end of this year. So that's going to be very interesting to see what happens after that. Let's see. Adon's very much looking forward to Intel. I get you. I'm in the same boat there. Thomas here, yeah, this is a good point. Disney, and one day we'll bring back the dividend. Yep. Luis here says Kimberly-Clark. Yep, definitely one to look for. But I would imagine, I don't really keep too close to tabs on Kimberly-Clark, but I would imagine that they operate, I would imagine they operate pretty similarly to Procter Gamble, just in terms of predictability. I could be wrong, though. Like I said, I don't keep too close to tabs on Kimberly-Clark. Gabriel's looking forward to Altria Group, definitely. Kevin here says he's looking forward to the best gainers in his portfolio. CAH, which is that Cardinal Health? I think it is. And then Gilead. Shamir says, always look forward to Apple, McDonald's, and Coca-Cola. Yeah, definitely. I'm kind of looking forward to Coca-Cola as well. Lucas says, when is Starbucks? Let me actually pull it up real quick. Let's go look at Seeking Alpha. So if we look at Starbucks, we're going to go look at the earnings tab right here. So their upcoming earnings are on May 2nd. So we've still got, what is that, 9, 10, 11? So just under 2 weeks, 11 days, 12 days. So we've still got a little bit of time before Starbucks. But yeah, I'll definitely be looking forward to that one. I've heard some pretty mixed things about their new drink. I think you guys probably remember hearing about their like olive oil infused drink. I've read some things that people were having stomach issues with it. I don't know how true that is. Some people might just have temperamental stomachs, and that might be a minority of people. I didn't really read too much into it, just the headlines. But yeah, I'll be interested to hear what Starbucks does for sure. Caleb looking for Apple. Might trim some of it for SCHD. Yeah, Apple's had a really crazy run up. I bought them back in December, right after Christmas, I think. And it's already up like 25%, close to 30% now, actually. So crazy. Let's see here. Sebastian, don't you own SCHD anymore? Yeah, I still own SCHD. I have 50% or 60% of my, I think 60. A large percentage of my Roth IRA is in SCHD, so I'm still buying it every single week. Pat wants to know, what do you think of Vici? I really like Vici. The price right now, I'm not quite certain about it. Really like the company. I mean, I've said this before, but I almost feel like it's blasphemy living in Las Vegas and not having it in my portfolio. So it's one that I'd like to have. And I think about it every time, I swear, every time I go down to the Strip and look at the buildings, look at Caesar's Palace and drive by MGM Grand and the Luxor and New York, all these ones. I think they own New York. Maybe it's Excalibur I'm thinking of. I always think of Vici. I'm like, man, I could be an owner of this. I feel like I'm missing out. Wallace is anticipating AMT. I haven't been keeping tabs on that company, but AMT is a great real estate investment trust. Yeah, man. You hit the nail on the head. Yeah, man. That's my response to this company too, Stanley Black & Decker. That's definitely going to be one to watch. SWK for sure. I mean, that's a dividend king, but they've been going through it as well. Let's actually take a look at their share price performance because they have not been performing well as of late. So when are they going to be announcing, first of all? So May 4th, so we still got a couple weeks for that. Yeah, just in the last year, they're down 44.5%. But year to date, they're bouncing back a little bit, up 5%. So, okay, we'll see what happens. Wishing good things for Stanley Black & Decker, though. And then Zal says said he's interested in McDonald's, Visa, Google, and Texas Instruments. I don't know. Have you guys ever looked at Discover? I know Harris, we were kind of texting about this. He's told me about it before, but he's been big into Discover, which makes credit cards like Visa and MasterCard. I haven't done any research on it myself, but I think they just announced, he was telling me, they just announced a 17% dividend raise. That's huge. So it might be an interesting one to look at. Chase here says Texas Roadhouse. Interested in that one. Good stuff. Suzuki Man, Corning. Kevin Burgess just recently put out a really good video talking about Corning. I highly recommend you guys check it out. And PKG, Packaging Corporation of America, report next week. Yeah, both really good looking companies. PKG, guys, is one of those very boring companies. I talked about it in, oh man, I talked about it in a video that I got a lot of pushback on, actually. These 10 stocks crush SCHD. But PKG is as boring as the company as a company can get. They basically make products that are used to ship things. So they'll make cardboard boxes, container board. They even make displays. Like if you go into a grocery store and see like go to Walmart and see a case of cardboard or plastic, whatever case of DVDs, that they make stuff like that. I really didn't do a good job explaining it, but if you guys go to their website, you'll get a visual for what they do, and you'll be like, okay, I've seen a lot of that stuff around it. They make the things that you see all the time that you just don't even think about. Hopefully that makes sense. Let's see here. Mr. Zack Attack wants to know: are you going to keep AT&T in your portfolio still? Yeah, I'm gonna keep holding on to it. It's still paying a dividend for me. I don't think I'm down too much. Maybe down. I think I'm down less than 15% on AT&T. And okay, so we'll just talk about it real quick. And I didn't go through the entire AT&T earnings, so I apologize if I get some of this screwed up. But basically, what happened with AT&T, like we saw, I mean, I don't think we actually looked it up, but let's do it. So AT&T, guys, dropped after earnings. They dropped something like, oh my gosh, it was like 9% in a day. So let's look at this. Like, look at this very steep drop. They went from 1970 to, they dropped over $2 per share. So in the last month, they're down almost 2%. So in the last week, they dropped 8.3%. And basically what happened is, I think they actually put up decent top and bottom line. They might have missed on one of those, but they only reported, I think, like $1 billion of free cash flow for the quarter. And I was reading, I think they pay out $2 billion for the quarter in dividends, something like that. So they didn't even make enough to cover the dividend for the quarter. But one thing that they were saying in the earnings call, and I think this is where a lot of people are kind of like raising their eyebrow with AT&T, is they are still guiding for, they're still expecting $16 billion of free cash flow for 2023. And so a lot of people are like, okay, just in this first quarter, you only did $1 billion of free cash flow. How are you going to get $16 billion by the end of the year? But let's see what happens. You know, AT&T, I mean, I think from what I read, just the little bit that I did read, I think they still added some subscribers. I think they still added some customers. And since the spinoff, I think AT&T's actually been doing really well. But let's see what happens. I think from what I've read, they spent more on CapEx this quarter than maybe they anticipated. And I might have that wrong. I don't know. But I need to I definitely need to go through the earnings because I'm kind of talking out of my butt a little bit. But yeah, so I'm still holding on to AT&T for now. And just going to take it quarter by quarter. So let's see here. Let's keep going. Zal says, after selling 50 holdings a few weeks back, this earnings fortnight doesn't feel quite the same. It's a little more quiet for you, huh, Zal? Not as much action. Let's see here. Let's keep going. Looks like I'm about 5 minutes behind in the chat. And once again, guys, just a quick reminder. So we're going to be wrapping this up in about 15 to 20 minutes by about 6 o'clock. 6 o'clock my time here on the West Coast. 9 o'clock if you're on the, right? Yeah, 9 o'clock if you're on the East Coast. And then immediately after, we're going to be jumping over. We're going to keep the party going for the Dividend Happy Hour after party, which in case you missed the opening of the live stream, this is a bonus live stream that I started doing every single week, or will start doing every single week. We're now in the second week. And if you want to tune into the after party, there's the link to it right up here. It's just patreon.com/retirewithryan, or you can click the link in the description of this video. It's the first thing right there. Make it nice and easy just to click there. It's going to be a lot of fun. So hope to see all of you guys over there. And it's just, you know, if nothing else, it's a good way to support the channel. I do this now. I'm fortunate enough to do this full time. So your support over there, and really just actually, even that aside, your support here, hanging out with me every week on the Dividend Happy Hour, it keeps me alive. It really keeps me going. So with that, thank you guys all so much for your continued support. I really appreciate all of you guys. So But let's see here. Zhao says, how has no one mentioned Microsoft yet? That's a good point. That's a good point. How has no one mentioned Microsoft? We've gotten a couple Apples so far, right? But no Microsofts. That's very interesting. That's a good point. Uh-oh, guys. This is a good question. This is the $1 million question. Giovanni wants to know, should I get into Altria Group? Well, if someone hasn't already said it in the live chat, Giovanni, we can't make that decision for you. That obviously goes without saying. And attached to that is an asterisk that says, do your own due diligence. This is all entertainment purposes, all that stuff you always hear. Here's some things to know about Altria Group. They're an extremely profitable company. They pay a really nice dividend. They are a triple threat in the dividend department. 8+% yield, near 8% 5-year growth rate. I think 53 years of consecutive dividend growth, so they're dividend king. The industry, they're a sin stock, which people don't particularly, some people don't like them for that. Some people don't like to invest in sin stocks. That's, up to each, that's relative to each investor, I guess, what they want to do about that. But some of the risks with Altria Group are, number one, their sales really only are here in the United States. That's as opposed to other companies like Philip Morris or British American Tobacco who have international exposure. So that's one reason people might not want to invest in Altria Group. I don't know how big of a deal that is to you. The other thing with Altria Group is they've had a hard time. I mean, you'll hear people say that the cigarette industry, there's basically less people smoking cigarettes as time goes on and consuming tobacco in that form. I don't know if the same is true about chewing tobacco. I don't know. You guys will have to let me know about that in the live chat if you have more information. But anyway, one of the big concerns, or probably the biggest concern with Altria Group, is that they have not done a great job so far of transitioning away from cigarettes. They kind of don't really have a solid exit strategy in place as it pertains to that. Not saying that cigarettes are going to completely go away forever, but if there's a diminishing demand for them, what are you going to do to replace those sales and continue to grow as a company? It's a pretty big question mark hanging over the company. And they've tried some things. They've tried their hand with Juul. That was a huge... You guys know. If you guys have followed Altria at all, or if you're a shareholder, you know that really didn't work out for the company. I think they bought it for multiple billions of dollars, took a minority stake in it. And, oh my gosh, they lost like 97 something, about 97, somewhere between 95 and 100% of the money that they had invested in that. And so they recently opted out of their non-compete. I don't know if that's the right word, but their agreement with Juul. So it opens up Altria Group to explore other options in the heated tobacco space. And so still a big TBD with the company, but that's probably the biggest risk with Altria Group. So whether or not you should buy it, I don't know. Just take those sort of things into consideration. As far as the valuation goes, I don't think it's too bad right now. What's actually their share price on? Because I haven't looked at it for a little bit. So let's take a look. I think it's up just a little bit. So 46, yeah, they've kind of bounced a little bit here. So yeah, maybe not. So they're up 2% in the last week, up just under 4% in the last 6 months, and then only up 1.4% year to date. So, not too much movement there. I personally am not adding more to my position right now, but that's only because it's already, like Altria Group makes up almost 10% of my portfolio's annual dividend income. And I don't want to add too much more and have it be the bulk of my income. I just kind of want to be divvied up a little bit better than that. So anyway, let's keep going. Oh, this is interesting. What is going on with Scott's Miracle Grow? I don't know. I really haven't kept tabs on SMG for a while. They dipped a lot. Then they had a nice rebound, and then I don't know what they've done since then. I think they've kind of come back down a little bit. Haven't watched their earnings, have not read a lick of news about Scott's Miracle Grow, kind of out of sight, out of mind for me. This is a company that I really wanted to like more than I did. I think in their industry, in the lawn and garden industry, they're probably the most dominant player. They're probably the most recognizable brand in that space. And so that's one big advantage they have. And they're also doing some really nice things from what it seemed like in the cannabis space as well. And we're going to see what happens there. But that could have been a really good growth, can be a good growth opportunity for them. But I don't know. I don't feel comfortable buying Scott's Miracle Grow at this point, just me personally. Let's see. And then Dominique wants to know, hey, everyone, cheers. Hey, cheers to you, Dominique. Did you consider adding a BDC like Ares Capital to boost income and reinvest into other stocks? There's some really good business development companies out there. Ares Capital is one of the good ones. I don't have that one in my portfolio, but I do have Main Street, ticker symbol Main, and then I do have Owl Rock Capital Corporation, ORCC, and I've been very happy owning both of those. I think ORCC is my number third or fourth biggest dividend income generator in my portfolio. So I don't think it's a bad move to own BDCs. It just kind of depends where you're at, I think. Anyway, let's keep going. Ooh, Darth says, got to go. Time for a victory cigar and scotch. Good for you, my friend. I like cigars. I've only had a couple of them in my life, but I think it's kind of fun sometimes. Okay, I'm about 6 minutes behind in the chat, so let me catch up a little bit. Real quick, Luis here says, you got to make some Rancid-inspired Dividend t-shirts for the Patreon. Dude, that's a really good idea. I actually have, you guys know me. If you've been watching my channel for a long time, you know I'm a big coffee guy. A lot of you guys know. I know Shamir knows. Zal knows. Suzuki Man knows. A lot of you guys know that I'm a big Starbucks guy. And so I have a running list on my phone of different like coffee mug ideas, stock related actually. So I thought it'd be fun at some point to make some investing inspired coffee mugs, which I'll do at some point. I think merch would be really fun too. I've got other ideas for shirts and stuff like that, but I'm not in a huge rush to do that. I think there's just there's other things I'd like to do before I get that. I even have, we're on the Dividend Happy Hour right now. I have an idea for for an investing inspired themed around this similar thing, a cocktail recipe book. That's way down the road, but I think that'd be a really fun thing to do at some point. Let's see here. Keep going here. I'm starting to catch up in the live chat a little bit. Let's keep going. Rio Tinto. Okay, so Anthony says, what do you think of AT&T's Q1 earnings? So I was kind of talking about it a few minutes ago. I really haven't dived deep into them yet. I'm probably going to do that tomorrow. So I can't give a super concrete answer yet, but from what I've read so far, the free cash flow situation wasn't great. And I was actually, one thing I said earlier is it seems like AT&T's been doing actually pretty well since they spun off Warner Brothers. And so recently I've been thinking about adding some more to my portfolio, adding a bit more to my position, but I still want to go through the earnings, but kind of after what I've read so far, I'm like, yeah, maybe just hold on a little bit longer. So let's see here. Okay, so Raul, I'm really glad you brought this up. So still enjoying the dividend tracker, my free dividend portfolio tracking spreadsheet, which was what he's talking about, which if you guys aren't using it, there's a link to it in the description. But it seems to be down at the moment. Do you have a solution? Yes. So what was happening is the dividend data was not loading. And what I did, Raul, is I went and just changed the formula on the spreadsheet. And I also posted, if you go to my channel, go over to the community tab, it's like the second or third post down, you'll see that I posted the solution to that problem in that community post. It's just basically a new formula that you can copy and paste into your spreadsheet, or just change like one of the numbers out. I walk you through how to do it in that post. And then you just copy and paste that to the rest of the cells in that column, and you'll be rocking and rolling, all back to normal. So, oh, hey, Michael says, I'm a screen printer, hint, hint. Okay, I'll keep that in mind, my friend. Mm-mm-mm. So Charles here says, do you like Tim Hortons? It's really popular here in Canada. I've never had Tim Hortons, but I've certainly heard of it. Um, oh, thank you guys. I see you talking about the community tab post. I appreciate you shouting that out there. Let's see. Let's see here. Steve says, do a mug with your logo, Darth's, Russ, etc. All the guys from your live chats. Yeah. You know, I really have fun. I really have fun chatting with those guys. So, Steve, I think you were here last week. Or no, we started a little bit later last week, so maybe you missed it. I don't remember. I apologize, but I really had a blast talking with those guys. We had Russ, we had Darth, Harris, we had Lanny. For the first time ever here, that was my first time chatting with Lanny. Really good guy. That was fun. We had Mark from the Uncultured Currency channel. There's 6 of us. Ryan, Darth, Russ, Harris, Lanny. Oh, yeah, and Mark. So that was a lot of fun. It was kind of chaotic. It was probably too many people to have in the stream, but yeah, it was just a lot of fun. It was more like, I said it earlier, it was more like the Dividend Variety Hour. Thomas here said, can you explain what happened with the spreadsheet? Thank you for the fix. So, yeah, basically what happened, Thomas, the spreadsheet, that particular column in those cells, pull the dividend data from a website called FinViz. It's probably easier if I just demonstrate it real quick. So if we go to finviz.com, let's just type in any company. We're going to type in Apple, okay? You go to FinViz, it'll pull up this sort of thing, okay? And if you scroll down, I've set it up so the spreadsheet pulls data from this right here, okay, where it's highlighted. Now, from time to time, this happens every once in a while. FinViz will just change the layout of the page, and maybe they'll change some things around. And then the formula that I have in place is all messed up because it's set for however, FinViz had it at the moment. So when they change things on their end, it messes up the formula in the spreadsheet. So then I basically just have to go in and adjust the formula to match the new layout for FinViz. And that's all I had to do. It was just changing one number. I changed one number in the formula from a 9 to a 10, and that fixed it. So, and that's explained in the community post as well. So anyway, let's keep going here. Okay, this is actually a really good question, and I think this is going to be the last one before we jump over to the after party, which once again, guys, if you want to join the after party, we're going to keep the party going probably another 45 minutes to an hour, I'd say. Just some more Q&A, more hanging out. There's some things I want to talk about regarding the Patreon, but it's going to be fun. So definitely tune in, follow this link to do that, or the link in the description. You click that, it'll take it right there. But Zach wants to know, what's your target year for being able to live off dividends, and what kind of yield do you think you'll have at that point? If I just keep going, Zach, if I just keep going at the rate that I am, I should be able to officially live off dividends by like 2046, which is, 23 years from now. And that's just investing the same rate that I'm investing today. Now, as far as what yield I think I'll have, I don't know. My yield on cost should be pretty nice, though, I would imagine. Especially as I've kind of really worked on building out some high growth positions in my portfolio. Like the Snap-ons, like the Lowe's, Starbucks is another one. I'll probably end up adding more. If I add Williams-Sonoma, that'll be another really nice high growth dividend stock. So I don't know what my yield will be, but target year is 2046. So at that point, if that works out, I should be 23 years from now. 49. I should be 52. But that's just assuming that I'm investing the same amount today for the next 23 years. But that's not really my intent. My intent, as my income continues to grow, hopefully the channel continues to do well. Hopefully. But hopefully my goal here is, as the channel, as my income grows, I'd like to invest more and more. And hopefully that will reduce the amount of time it takes to eventually retire and live off dividends. So we'll see what happens, and yeah, we'll just have to see what happens. I'm just kind of taking it year by year, and because I could have this plan and so many things could change, we just don't know. But that's kind of my plan as of now. So let's see here. Let's see. Kevin says I will be 80 by then. But anyway, guys, that's about wraps it up. I think this is a good place to wrap it up for the Dividend Happy Hour. I know I just mentioned it, but once again, guys, let's keep the party going. I'd love it if you guys tuned into the after party and joined us over there in the Patreon community. If not, that's cool. We'll be back here same time next week. And until then, I hope you guys have a fantastic weekend. Stay out of trouble. And keep up the good work. I'm proud of you guys for continuing to invest, and I really appreciate you taking the time to come hang out with me and talk dividends every single week. I hope you guys have fun doing this. Hope you have fun hanging out. I most certainly do. And for those of you who are tuning into the after party, I will see you over there in just about 2 or 3 minutes. I'm going to I'm just going to get some more water here, my sparkling water. So anyway, guys, thank you once again so much for hanging out with me. I'll see you in the next one. I'll see you on Sunday. It's going to be a good video, so definitely check it out.